Hello everyone, I'm Rakshith Pai and our today's question is, will the stock market correct over worries of Russia-Ukraine war? What should retail investors do in this regards? Before answering this question, I want you all to think about this. Do you really think there will be a war? We are living in a globalized economy. One way or the other, each and every country is dependent on one another, and we are just out of the China-based pandemic. In that sense, economically, we are just recovering the war. And a war at this stage would be catastrophic for everyone. That doesn't mean there's no war at all. Obviously, there's a war and chaos going on in various locations. However, the likelihood of a war of such magnitude, wherein two of the world's strongest and most powerful countries against each other, is extremely remote. So I strongly believe that we are not that stupid to go for a war in this situation, because we just came out of a war, that is the bio war. Is the stock market correcting as a result of war fears? The stock market did in fact drop due to Russia-Ukraine war worries. But there is a much bigger factor of worry here. We all know that printing money or keeping interest rates near zero and flushing liquidity into the system will bite back sometime in the future. That time has come. We are staring at one of the highest inflationary periods in probably the past 2 or 3 decades. There are two factors involved here. Primarily, we are recovering from the pandemic. The demand is back, companies are giving higher sales figures, so the top line is strong and growing. The economy is opening up and easing into normality. Just like how people are slowly removing their mask and trying to breathe easily, the economy is also trying to breathe as well. But the second factor is that with sales and strong top line, the bottom line is declining, meaning companies are showing growth in sales but decline in net profits. You might have seen this pattern while going through various Q3 financials of various companies, especially in regards to FMCG. It is very evident. Due to higher cost, even companies with better sales figures are showing reduced profit. Their margins are hit due to inflation. That is the worry now. Remember this, the relation between a company's earnings and its stock price is like that of a human and their shadow. The stock price will always follow the earnings. If earnings are hit, the stock price will surely correct. And when it does, it's a matter of how strong the buying hand is in relation to the sellers. With inflation, the company's earnings are hit, hence this correction. What should retail investors do? If you are a long-term investor, this correction is offering you an opportunity to buy low. Buy as and when the stock on your watch list makes a drop. Every time there is a dip, increase your SIP. As far as short-term investing or swing traders and others are concerned, do not take fresh position unless the market shows a clear direction. We are dealing with both inflationary pressures and geopolitical tension. It's not worth the risk of holding on to your position if the short term is your view. It is also suggested, or it is also a good idea to have a well-balanced portfolio with special attention paid towards gold and silver. When things are this bad, metals have a higher probability of wending off both inflationary pressures and geopolitical tensions. They can balance your portfolio. That's it for now. Don't forget to subscribe to our channel. It's all about investing, economy and personal finance. Thank you for watching.